Good morning and welcome to today's webinar, a brief employee retention tax credit webinar. Today's presenters are going to be Lou Young and John Noonan from Witham. We also have Jim Appleton and Grayson Hannigan from NJCAR on hand. Before we get started, I'll just go over a couple housekeeping details. On the right-hand side of your screen is a control panel. Pay particular attention to the questions tab. Everyone will be muted during the webinar, but if you have any questions, enter them into the questions tab, and we will go over them all at the end so we don't derail the webinar itself. I guess with that, I'll hand things over to Jim to kick things off. Jim?
Great, thanks, Brian, and welcome to all of our participants this morning. NJCAR wanted to schedule this webinar to offer our members, kind of an update on the latest with COVID-19 stimulus programs that have been made available to businesses like car dealerships across the U.S. I especially wanted to drill down at this time a little bit more on the employer retention tax credit, as there have been some changes and there could, and I want to emphasize could, be some opportunity there as COVID-related shutdowns remain a real possibility, and chip shortages and inventory issues could have a significant impact on dealership gross receipts. I should also note that dealers in New Jersey and elsewhere have been inundated with marketing calls and emails from service providers offering to help dealers access these benefits for a very generous cut. Some of these solicitations have generated more questions than answers, so NJCAR is calling on our trusted advisors at Witham to help sort all of this out and give you a really solid foundation for understanding what opportunities may or may not be there. So at this point, let me introduce Lou Young and John Noonan from the Witham's automotive advisory team. Witham and their team of automotive accountants and business advisors have always been a great resource to NJCAR and our members, and we're extremely grateful to them for their time and expertise this morning. We also want to note that on the call with us today is Grayson Hannigan, NJCAR's Director of Legal Affairs. Grayson is also a resource to our members on questions about PPP and the ERTC. What Grayson doesn't know, he knows a guy who knows, or gal, and he can get you answers. So with that, let me just say once again, thanks to John and Lou for your time and expertise this morning, and I'll turn it over to you.
Thanks, Jim. I'll let John get started in a second, but we certainly appreciate this opportunity. We've been talking with dealers, NJCAR, NADA, a number of different states regarding this ERC PPP program over the last 18 months. And I have to say it's been quite a roller coaster ride, Jim. It's probably a roller coaster that would be illegal to ride on based on the ups and downs. But we did, as Jim pointed out, there's a couple things we want to clear the air. We want to go through some of the basics, and we want to talk about some of the things that are being said in the industry, and also talk to you about what opportunities may be out there, could be out there, as Jim said. So with that, I think we'll get started. We'll just go through the PPP quickly, and then we'll start talking about the ERC. John, what do we have on the PPP right now? Where do we stand?
Okay, so for the PPP forgiveness, everybody should have already filed for their PPP 1 forgiveness applications. I think most of my dealers have already received forgiveness on them, if not all. There was a handful that applied for the second PPP loan and actually have already received forgiveness, although that number was very limited. The SBA has expedited the review and approval process, and certainly with the second round of loans, they've been very quick in getting those approved. And currently, there's no legislation to amend the current program. So going to the next slide, I'll set the table for the timeline. ERC is a fully refundable credit for certain wages paid to employees during specified periods of economic hardship. Those wages included also are going to be the qualified health plan costs. It was enacted March 27th of 2020 as part of the CARES Act. And I'll just give you a little timeline. December 27th of 2020, the Consolidated Appropriations Act 2021, it eliminated the ban on ERC if a taxpayer also obtained a PPP loan, and it created a retroactive 2020 refund opportunity for all the dealers, or a number of dealers. It extended the ERC into the first 2 calendar quarters of 2021 and made it more generous than the 2020 ERC. It expanded access to the 2020 ERC by raising the cap from 100 employees to 500 employees. On March 1st of 2021, the IRS issued Notice 2021-20. This provided new guidance implementing changes made by the Consolidated Appropriations Act. It allowed employers that previously received a PPP loan to be retroactively eligible for the 2020 ERCs. It also provided new guidance regarding substantiation requirements, and it provides some guidance on documentation of a decline in gross receipts. Then a little later in the month, March 11th, the American Rescue Plan Act of 2021 came about, and it extended the ERC through December 31st of 2021. It adds additional eligibility criteria for recovery startup businesses, among other things, and it extended the statute of limitations on the ERC from 3 years to 5 years, which means you now have 5 years to apply for it. As we rolled into April of 2021, the IRS issued Notice 2021-23. This addressed changes applicable to the 2021 ERC for the first 2 quarters, calendar quarters only. It later guidance is going to address the 3rd and 4th quarter of 2021. It discusses the election to use previous quarter amount of credit and qualified wages and so on. So that brings us up currently. Lou, do you want to give us a layout of an overview of the ERC?
Sure, thanks, John. You know, and some of the key things there, you know, you do have time to apply for the ERC going back to 2020 if you haven't done it already. The statute of limitations takes you from 3 to 5 years, so that's good. Gives people time to look at this, and it did extend it to the 3rd and 4th quarter. We'll talk about that a little bit as well. Current legislation before Congress, that you may or may not know, eliminates the 4th quarter ERC participation, but as Jim can tell you, we don't know where that's going or what that will look like when it comes out in final form. So at this point, we're in the 4th quarter and we're looking to see if dealers are qualifying. So for 2020, the eligibility was pretty simple. Basically, you had to fall into a full or partial suspension of operations, or you had to see a 50% drop in gross receipts when compared to the same quarter in 2019. And again, you were able to continue through the next quarter as long as gross receipts were at least 80% of the same quarter in 2019. So there was a rolling aspect to this if you did qualify for the gross receipts reduction. Fortunately, or not, unfortunately, Most dealers did not qualify for the gross receipts reduction. As I said to begin with, we saw a roller coaster in terms of business activity last year, which moved quickly into positive areas in the second, third, and fourth quarter. So again, we didn't see many qualify for this, but as I pointed out, most dealers, if not all, certainly could apply under the full or partial suspension of operations. And we'll talk about that as well. For 2021, you have the same full or partial suspension, but the gross receipts bar was dropped from 50% to 20%. So that, again, there were not a lot of dealers that qualified for the gross receipts test, especially in the first and second quarter, but the jury is still out in the third and fourth quarter. We do need to discuss that. You do need to look at your third quarter to see if we had any drop in gross receipts. The wage period for 2020 was 3/13/20 to the end of the year, and it was the full year as of right now. It's the full year for 2021. You'll notice that 3/13 starts in the first quarter. So from an eligibility standpoint, you are looking at first quarter receipts, and you're also looking at parts of the first quarter where we did have a suspension of operations based on government orders. So there's a small piece from the first quarter. The IRS treats that as an add-on to the second quarter. So if you are filing your 941 amended returns, it's called a 941X, usually filed by your payroll company. You may have some ERC qualified from the end of the first quarter, but that gets rolled into the second quarter. So that's just a little housekeeping part of how the application works. Qualified wages, the wages are up to $10,000 that qualify. The credit is based on 50% of qualified wages in 2020, same 10,000 in 2021, but it's 70%. The credit is 70% of those wages, and that'll be in the slide below as well. For purposes of ERC wages, health plan expenses can be included in this definition. So these are the health plan expenses provided by the employer. Obviously, the employee healthcare expenses are typically in gross wages. The employer health plan expenses would be an add-on to this definition. And again, as I mentioned, it's a 50% credit for 2020 and a 70% credit for 2021. In 2020, it was restricted to the 50%, $5,000 per employee for the entire year. So over the partial shutdown period or over the quarters, you were limited to a $5,000 credit. In 2021, the credit is on a per quarter basis. So in theory, if you qualified, you would be able to pick up an additional $28,000 in credits if you had employees and employer qualifications met the eligibility tests. There is an aspect of this when you file your 941X, that's your amended quarterly payroll tax return. You have the capability of checking a box in terms of whether you want to reduce or take an advance payment or reduce your ongoing deposits. I would say close to 100% have chosen the refundable credit as their avenue to get the money back from the IRS. Having said that, As all of you know who are on this webinar, the IRS has been very slow to get the money back for 2020. We still have a lot of clients, a lot of dealers that I know that are waiting for those checks. And it's not just the automotive industry, it's across the board, all sectors. Everybody is waiting for these payments to come out of the IRS. John, do you have anything to add or jump in here with any comments?
No, actually what you just said, I've had a couple of clients asking about how long it's going to take to get that. They haven't seen it yet. And, you know, all we can tell them is just they're slowed down right now in getting those back to the companies.
So again, we touched on this briefly as well. In 2020, you had to have less than 100 employees to qualify. You could qualify if you had over 100 employees, but it would only be for wages of employees not providing services. So if you paid anybody to not work, so to speak, those wages could be included. But other than that, the only wages for all employees that qualified were for employers who had less than 100 employees. Same stipulations in 2021, except it was 500 instead of 100. So again, if you had more than 500 employees, you're only able to collect the ERC for wages of employees that did not provide any services. As John mentioned to begin with, this really opened up for everybody in December of last year when Congress passed the amendments to the ERC program, which allowed you to file for the ERC if you applied for a PPP loan. So that was a little bit of a game changer, and it was on a retroactive basis. The only stipulation that they did put in the legislation was that you could not use the same wages that you use for your PPP when claiming the ERC. So if you had, I'll make it very simple for you. If you had $1 million of wages during your covered period, your 24 weeks in 2020, and your loan was for $1 million, that gave you an extra $500,000 that was eligible for the ERC. Again, so you had to be careful on how you allocated those wages during the covered period. Because we did see a lot of crossover between the covered period and the partial shutdown periods. Go ahead, John.
There were some instances where we had dealers who had more than enough wages to apply for forgiveness with a PPP loan, and instead of using the full amount, we'd cut back on that, correct? And use some of those, basically lowered the bar and use some of those excess wages for the ERC.
Right, so in some cases, dealers cut their covered period from 24 weeks to 16 weeks, and then had a little bit more eligibility. But for the most part, as everybody knows, the wages paid over the 24 weeks pretty much gave you plenty of room to file for your ERC. As we all know, when the covered period went from 8 to 24, we really didn't have to sweat getting enough wages for the PPP loan forgiveness. And again, just looking at these differences, the qualifiers are full or partially suspended, and the 50% reduction in gross receipts. In 2021, it's full or partial suspension and a 20% reduction in gross receipts. So let's go into the details a little bit here, and we're going to talk about this full or partial suspension because that really is the crux of how most dealers were able to qualify for this. And again, just FYI, NADA has put out some information on this recently that talks about who qualifies and how you can qualify, and it basically is in line with what we're talking about here. It's to start with, it's a three-part test. You have to have a government order, and the government, as we point out below, is federal government, U.S. federal government, state, or local. It does not include any governments of any countries outside of the United States. So any shutdown orders coming from Taiwan or France or Germany do not apply for this qualification. This is where the order limits commerce, travel, group meetings, and the order affects typical operations of business in a non-trivial manner. And again, as I pointed out, it's got to be federal, state, local, and not just statements in press conferences or interviews with the media or declarations. It's got to be a bona fide government order. Now, go ahead, John.
To interrupt a little bit, and I think this is the area where a lot of these companies that are coming into dealers now claiming that they can get them millions of dollars in ERC credits, this is the area where they're using it. Is that correct? As far as whether it's the supply of chips coming in, they're making the claim that they would use that as a partial shutdown. But there's some question as to whether the chips or the shortage of chips is because of a shutdown or just a supply demand that they can't keep up.
Right, that's correct.
Is that what we're seeing?
That's absolutely correct. So a couple things. We have talked to these companies. John and I were in a meeting recently where they came in and gave a presentation to us. They said a couple things that really set us off. One, that any government closure orders from any country in the world qualified for the ERC. And the second thing they talked about was that because it was so difficult to trace back these supply disruptions, that the IRS would never be looking for any type of qualifier, which it expressly showed where the government shutdown did apply the supply chain. And those two things really set us back. Basically, once we did a facts check, or we actually told them at the time that they needed to get their facts straight, and that was a little concerning to us. We've gotten a number of solicitations. We've gotten a number of these emails and letters passed on to us from dealers and other businesses, and there are some great concerns out there that we should all be cautious about when we look at this. But we may end up qualifying in the third or fourth quarter. We'll talk about that in a little bit. So
yeah, I think Jim had said earlier, and again, I'm sorry, they're asking for a large chunk of this credit that you receive, and then you're going to be amending the 941. And if there's issues down the road, they've already gotten their money and they're gone, and you're responsible if there's an issue with the 941. So exactly. Just be careful with what you're doing.
And I think the important point that's here is that it's easy, before there's facts and before there's a contested case to say this is what we think. It's very hard if the IRS comes in and wants to question or audit your return. You don't want to be the test case here. So I think talk to your accounting professionals. I think there is a very strong possibility that some dealerships will qualify in Q3 and Q4, not under the government shutdown. Let's pray not under the government shutdown qualification, but under the gross receipts. And if that's the case, then I think your accountants are in a better position at a more reasonable rate, billing rate to determine that and help you sort through it.
So let's go through what we do know. Based on NJCAR releases from last year, there were a number of executive orders and administrative orders that, started this shutdown suspension and sort of ended this suspension. And I think we have these all memorized. We don't have the dates necessarily memorized, but we do know what happened. And basically, this first executive order that really had the most meat in it was basically shutting everything down as of March 21st, except the executive order did allow for service departments and dealerships to be considered essential business. And again, from a legally standpoint, Grayson or Jim, if you want to step in here, you can. But basically, as we know, dealerships were able to provide car maintenance, repair services, and mechanics to the public basically throughout this whole process. They just could not sell vehicles during this period from the dealership itself. Now, I will tell you, a funny little anecdote. I've talked to dealers in different states, including New Jersey, and they basically said, it's tough for us to do this because in our mind, we were really never shut down. And so the thing that occurred next was this March 30th. It basically opened things up from a sales standpoint that allowed sales to be conducted online or through telephone, text, or emails, consistent with current law. And we talked about that at the time. What could you do? What could you not do in terms of completing these transactions? The executive order, administrative order that really got things back, and I'll say this, it's easy to say now, but basically as of May 22nd, the showroom really opened up again. And while there were some limitations on occupancy, there were some dealers that told me that they would certainly love to be at 50% occupancy all the time. And at this point, things really started to roll. And from a financial standpoint, we saw things start to take off for most dealers in June, and then really for the industry as a whole in late June and July. We all know what happened after that. So this is what Jim was referring to before. We talked about the second test, which is the gross receipts drop off. We really are wondering about the third quarter because we are seeing these the restriction in inventory. And we're seeing obviously restrictions like that are affecting A, the bottom line, and B, sales. So gross receipts, new car sales, new vehicle sales are a huge part of gross receipts. And as things started to tail off in the summer and early fall, you might be seeing a drop off in gross receipts. So, getting back to the supply chain disruption, by meeting the gross receipts test, yes, you could qualify. And I recommend that everybody look at their third quarter and certainly the fourth quarter to see if there's any drop off in the gross receipts and start thinking about whether you may want to apply for the ERTC. So again, this is something that's ongoing. We're looking at it as we speak, and it's a two-edged sword. We hope that nobody qualifies, right? We want to see everybody's gross receipts at the same levels or higher, but because of this disruption, we may see these gross receipts start to drop off. And again, just to summarize a couple things, these are the key points. The 50% reduction for 2020, the credit applying between March 13th, and again, March 13th was just before that that March executive order that came out. So that executive order covered part of the first quarter of 2020. And again, the maximum credit for on an annual basis was $5,000 in 2020. And then they loosened things up in 2021. Instead, we had this 20% qualifier for gross receipts and the full or partial suspension of operations, which we have not seen in terms of federal, state, or local restrictions. And again, the credit went up from $5,000 annually to $7,000, 70% per quarter, which allowed for a greater total amount to be received. And again, both for PPP1 and PPP2, the PPP wages are not included in the calculation of the ERC wages, but as we all know, there were plenty of wages during the covered period that allows you to apply for the ERC. And one other note, this last point was a great win for us. The gross receipts does not include your PPP wage forgiveness amount. So for the fourth quarter of 2020, if that's where you plugged your income from the forgiveness amount, you don't have to include it in your gross receipts test for that quarter. So that, I think that was a great win. The IRS came out with that, NADA pushed it, and we were very pleased to see that. So with that, Jim and Brian, I think what we'll do at this point is, we said we would keep it to a half hour. We'll open it up for questions.
Yes, we do have several questions here. The eligibility slide showed partial suspension or reduction in gross receipts. Wouldn't all New Jersey dealers qualify since the New Jersey order mandated the showroom shutdown?
So the partial shutdown, either you qualify for the partial shutdown or you qualify for the gross receipts test. In some cases, you qualified for both, but for the most part, we only saw the qualifications under the partial shutdown. So I would say 100% of the dealers qualify for the partial shutdown. Very few in 2020, close to zero, qualified for the 50% reduction in gross receipts.
Okay. Can you use 24-week CP wages in excess of those necessary for forgiveness for the ERC? Would you have needed to designate that at the time of application?
Well, when you're applying for forgiveness, no, because technically, hopefully you haven't applied for your ERC yet. What you're looking at is your excess wages.
Brian, can you mute yourself?
What's that? Brian, can you?
Brian, to mute himself. It was hard to hear you, though.
I'm sorry.
Go ahead.
So basically, we all know that over the 24-week period, you had well over your loan amount for your wages. So what you have is all those excess wages are allowed to be included for your ERC wages. And again, virtually 100% of the time, there were enough leftover wages to use in your ERC calculation. Just to point it out, if it had stuck to the 8-week qualifier for, you only could use 8 weeks of wages, I think we would have had a much more difficult time establishing credits at that March, April, May period. So the 24-week extension was good for the PPP program, and it turns out it was good for the ERC program as well.
Yeah, I don't know, Lou, if they were talking about, if you made your application for the forgiveness on the PPP, the first round, and you used all those wages, but you didn't need to use all of them. So let's say you use 24 weeks. Can you carve out part of that for the ERC, even though in your application for that first round, you had used all of it?
Well,
I'm not-
the answer is yes. I mean, if you have wages in excess of your loan amount, you would be able to carve out those wages, yes.
Okay. Even if you made the application using all of them?
Well, even if you made the application using all of them, that's correct. As you know, in the forgiveness application, you had your forgiveness amount was the lesser of 3 lines. It was either your total wages, your loan amount, or your wages divided by 60%. Okay. So that allowed you to use those excess wages. What else, Brian?
Okay. Yes, I had to unmute myself here. Can you provide more information on the 10% safe harbor? Does this have to be a reduction in receipts or also lost revenue from the true potential of the market?
I don't know. I don't call it a safe harbor unless there's another safe harbor that they're referring to. What they were talking about was a nominal reduction. So you had to have, if you had less than a 10% nominal effect on your business activity, on your business, and I'm not even sure how that was defined, then you would qualify. But generally, we did not see that. Like I said, after the shutdown period, after that May 22nd designation, things really took off for the dealers.
Okay. Can gross receipts reduction be for a specific department?
No, total gross receipts for the operation. So again, gross receipts for dealers, it includes total sales, which is at the very top, and other income, which is at the very bottom. So we would be adding those two together to get to gross receipts.
Okay, we've got 3 more here in case, and unless any others come in.
And not including the PPP loan forgiveness too on that, right?
Right. Not including the PPP loan forgiveness. That's correct. That's a key point, John.
Okay. This is a clarification question. On the slide, one of the slides, it said, it wants to clarify, is it 2021 gross receipts reduction? Is it the quarter in 2021 versus 2019? Is it the slide said 2020 versus 2019 for the 2021 ERTC?
So it's in 2020, it's a 2020 quarter compared to 2019 quarter. In 2021, it's 21 quarter compared to 19 quarter.
Okay.
Clear?
Great. Next one, if the second round of PPP covered period includes a portion of the third quarter only eligible for weeks after the end of the covered period. I'm not exactly sure if that question's worded properly.
I'm sorry, can you repeat that, Brian?
Does the second round of PPP covered period, if it includes a portion of the third quarter, only eligible for weeks after the end of the covered period? I don't think that's worded right. So
let's talk about that. So for the second, the second PPP program started much earlier than the first program. So most people that applied for it, and we're not talking about a lot, but the ones that I know that applied for PPP2 applied in late January, early February. So what that did was that moved the 24 weeks to the beginning of July instead of October. So it fell into a piece of the third quarter. But again, just like PPP1, I'm confident that there's plenty of excess wages to cover the loan amount, and that you probably would have enough if you qualified in the third quarter for the gross receipts reduction. You probably would have enough wages to, even though there was a small tail at the beginning of the third quarter, you would have enough wages to apply for your full ERC in the third quarter. And again, let's see where that turns out. I haven't seen anybody yet who qualifies, but I suspect that there could be some dealers out there.
Okay. Could reduced capacity count as a partial shutdown?
Well, you know, we've talked about that. Again, I had one dealer tell me that, you know, he'd love to see his dealership at 50%. It's a tough question, Brian. Jim pointed out the obvious. This is all going to get decided in 2 years when there's an IRS audit and it goes to court. What we have are hard and fast executive orders that were issued by the governor that start dates and end dates. That's all we know. And we also know that things really took off when those restrictions were lifted. We were lucky in our industry that we saw a tremendous growth in sales and service over the last 6 months of 2020. Let's hope that everybody on this call benefited from that. So there's a couple things out there. There's something called comparability. You know, where were you prior to the shutdown occurring? Between the beginning of the shutdown and the end of the shutdown, you know, was your business comparable, you know, to prior to the pandemic? And during that period in the second half of 2020, was it comparable to 2019? And I think the answer for many of us is yes. You know, we saw, you know, huge increases in all kinds of financial benchmarks for the dealers. So we do have a hesitancy in applying any type of CDC restriction or, you know, any other types of recommendations that were out there. You know, as I said, we have the hard and fast orders that were given by the governor, and when things after the 22nd of May, things really opened up for the dealers, and they were able to conduct their business pretty much back to the way they were.
And Lou, let's just, you know, at the bottom line, unless or until there's an order or a clarification that comes from the IRS that says you can interpret supply interruptions as a partial shutdown, we can't make that leap. And you know, I wouldn't want to bet on the IRS, you know, coming down on that side of the interpretation. The language is very clear: a government shutdown, not an effective shutdown caused by government restrictions or caused by supply chain disruptions. You know, it's a government ordered shutdown.
I mean, and to use their words, it's a government shutdown, not any disruptions caused by a demand or supply issue. It has to be from a government shutdown. So that's perfectly clear right now. And there are, you know, we have major concerns when businesses or these companies come in and they tell dealers that they don't think the IRS will go back and audit or check anything because it will be too difficult to show where the supply chain disruption started based on the government shutdown. So that type of response was very concerning to us, and you know, basically led to any type of you know, a pause to any type of conversation like that.
Yeah, and the IRS may come at us dealers and say, you have to show us where it happened. They're not going to do that legwork.
That's right.
And the last question we have, Lou, if I could ask you to go back to where you had the executive orders and administrative orders. Someone was just asking me if we could summarize the various New Jersey restrictions from March 2020 through the second quarter of this year. I'm not sure, Jim, I know Jim has said this 1,000 times under the sun. Just a quick summary of the restrictions.
So these are Jim Appleton's words on the bottom here, or whoever crafted this for Jim. This basically was the start of the process. March 21st, if you all remember, I remember it like it was yesterday. The governor came out and basically shut everything down. We were all struggling with what was essential and what was non-essential, and it was determined that service provided by dealerships was essential. And while the dealership showrooms were closed, the dealerships were open for business for providing service. And again, as Jim pointed out, things were a ghost town for several weeks around here until the end of March. At the end of March, basically, they opened up sales for the dealerships to be conducted remotely. And this basically started things back from a sales standpoint, and it also, the service departments also saw a pickup in activity as well. And then things really opened up at this point as of May 22nd. And again, all this is on NJ Car websites, and there's been a great trail by NJ Car basically noting all of the governor's orders. So you can go there as well to see this, but this was the date when things opened up, and at this point, basically the dealers were open for business to sell cars.
And to simplify it, John and Lou, if you disagree, Grayson, jump in if you disagree. I think what our story, and we're sticking to it, is the March 20 order shut dealerships down. The May 22nd order opened them back up. I mean, the partial, shutdown. I mean, I think, it was March 20 to May 20. And I think that's the effective time period for the government shutdown. You guys,
that's spot on, Jim.
Yeah.
And also, I mean, from a legal standpoint and from a practical standpoint, I mean, that's what we saw. As I mentioned, things really started to take off in June, but after June into July, August, we saw a substantial increase in activity and the financial soundness of the dealership group. And again, if you have any questions, Jim Appleton, Grayson, excellent source for this. John and myself, we can be reached anytime. This is not easy. It's not an easy concept, and the ERT itself is not an easy calculation. So if you do have questions, please feel free to contact us anytime.
Okay, is there anything that Lou, John, Jim, Grayson, anything else you guys want to add?
No, just thank you.
Thank you.
Buyer beware, right, Jim?
Thank you to John. Thank you to Lou. Thank you to Jim. If you missed any part of today's webinar or want someone else at your dealership to view it, we will have a recording of the webinar as well as the slides up on our website this afternoon. So if nobody has anything else, that concludes today's webinar. So stay safe and have a great rest of the day.
Thanks,
guys. Appreciate your time.